Hello and welcome to another Top Trades video. In this video I'm going to be looking at some of the upcoming trades we're planning for in major indices and Forex based off the optimum patterns identified here in our new seasonal platform. If you haven't had a chance to check it out for yourself, by all means jump on, grab yourself a 7-day trial, jump on. I'm going to be looking at, as I say, indices and Forex. We have hundreds of markets on here across different sectors, different asset classes, your metals, your grains, your commodities, stocks. You can see from our planner the optimum trades that it has identified for many markets for the next few months. And there's lots of trades to aim for in there. There's lots of patterns, lots of markets setting up. So I'm going to be focusing on indices and Forex. I will be making another video looking at US stocks and UK stocks, but by all means jump on and start digging for yourself. We've had some really good conditions over the recent months and some fantastic seasonal trades. None more so than what we can see here from our top 20 strongest seasonal correlations. We have a list of 20 markets here and they're showing you the positive correlation, markets following their historical seasonal patterns, and we have incredible numbers in here up in the high 90s, mid-high 90%. And if we just look at one just as an example, at Hershey's here we can see that strong positive correlation, which means the market is doing exactly what you'd expect it to do. And there's been some fantastic trades in through there already. You can see the optimum, one of the optimum patterns that our platform identifies has already played out absolutely perfectly through that period. Really strong acceleration through there, and be looking for continuations from that. So if you're completely new to seasonality and you want to just get a nice easy dip your toe in, I would start with that list. If you're a bit more experienced, take a look at the rest of the calendar and the planner, start going through the different sectors, different asset classes, and dig into some really high quality optimum seasonal patterns. But to say, I want to be looking at indices and Forex in this video. I'm just going to take a look at indices, and it might seem strange for a video it's titled Top Trades. We're looking at the indexes in here, looking across some major US indices, the FTSE in here as well, and we actually have, we're drawing a blank. There we do see the dollar index and the VIX on here, which I actually will be coming to in this video as well, just a little bit later on. But what I want to actually draw attention to is we don't have optimum conditions at the moment in the likes of our S&P 500 or NASDAQ or Dow, etc. We don't have optimum conditions in that. And that's information for me. That's telling me I need to trade differently. I need to trade more conservatively, more defensively. The problem with a lot of traders is they try to do the same thing every day, every week, every month. They expect the market to be the same and give them the same opportunities and the same returns. And that's not the case. There are times where we have optimum conditions and there are times we have suboptimal conditions. At the moment, that's the kind of conditions we're entering into with regard to a lot of our major indices and therefore the stocks within those indices. So I want to just draw attention and take a look at the S&P 500 and just go into a little bit more detail on what's actually going on. You can see again the optimum patterns along the bottom of the platform through here, and you can see that two of the periods we have suggesting that move to the upside, strong positive movement to the upside, and there's 80% success rate of that pattern in particular. We've got another one there, 85%, and that's what the market has done. We've been following that pattern. We did have the seasonal low early in March. We've seen that strong run to the upside, but the problem is now we're out of those optimum conditions. We've passed that and we're actually moving into a weaker period. You can see the platform has not identified any optimum conditions, any optimum patterns within this period. There is a slight negative bearish bias through here seasonally, but it's not much better than 50-50. 65% here, it is negative. If we scroll down to the bottom of the page, we can actually see the returns for the S&P 500 over the last 20 years during that period. And a lot of the movement that we actually see, that negative downside movement, that bias that we have through May, a lot of it has come from 2010, and 2012. And the rest of the years are actually fairly inconsistent. We don't really get an awful lot from it. And if we take out those 2 years, we actually see the market is pretty flat. So what that's telling me is I need to trade defensively. The market is likely going to be range bound through for the next couple of weeks. If we take a look at the actual chart, that's exactly what we have. We've come out of that period where we typically expect the market to move to the upside. There's a strong seasonal bias for the market to move through to the upside and to create that seasonal low right there in early March. We've got that, and we're now coming into a period of say where market's two-sided. We could get spikes to the upside, spikes to the downside. We don't have a strong bias, and we're not going to have the same conditions. So trade defensively. Don't just arrive at the chart every day expecting to get the same opportunities. Trade differently, trade more conservative targets, take a smaller number of trades, and just be less aggressive. When I have more optimum conditions, I'm more aggressive. I have larger targets. I look to get in earlier. But we don't have that at the moment. To say the big thing that differentiates good traders from unsuccessful traders is they don't manage the downside, and they have the bigger drawdowns, and a lot of that comes from the fact they just try to do the same thing every day. So not saying not to trade in here at all, but just approach it a little bit differently. As I say, more defensively, smaller targets, reduce the number of trades if you're trading the indices and individual stocks as well. We typically will see some profit taking after that move to the upside. I'll expect some sort of a negative move to the downside. Not that long to wait till we do get a pretty consistent pattern. That period from 22nd of May through during the 12th of June has historically been a little bit more positive, so that's something you can look for. And the returns have been quite decent from that, so that's something you can wait for. But the next optimum pattern typically isn't until we get to July. Now, I have been getting a lot of emails and questions asking about recessions, how our seasonal pattern is going to be impacted if we get a recession. And with the new platform, we can look into that. We can do a bit of research and actually look at the average movement within the years we have those corrections caused by recessions. Here for the S&P 500, I have the 44 years of history, and if we go back through the recession years, we can take a look at 1980, 81 also. We also have 90 and 2001 and 2007. I personally wouldn't count 2020, although technically there was a recession, but it was very different from the normal recession. We pretty much closed the economy, closed the world down because of COVID, and then we come out of recessions as we opened everything up again. So not quite the same, so I haven't factored in. But by all means, if you want to add it in, it actually doesn't make much of a change to the pattern, but you can factor it in if you wish. So by doing that and actually look at the pattern, this is the typical movement we have within those recession years. So the average movement within those years, if we overlay what the current year is doing, there is a positive correlation. It's 18%. And it is possible we see movements similar to this, and we do see that weakness late summer, end of July. We typically do see some weakness through August. The interesting thing is that pattern also suggests we do not an awful lot through this period, that latter part of May and in through June. So again, not optimum conditions, looking for continuations of trend through this period. It's not what I'm planning for at the moment. It's not plan A for me, and my bias is still to the upside, but not until late May, or ideally when we get into July. As we get closer to this, we'll see how the correlation is stacking up. Do we continue to follow this? Do we see that spike into July, and therefore possibly say looking for that weakness? But at the moment, I'm looking at a positive bias using the True Path feature on the new platform, looking at the years that actually the market has the strongest correlation with. So not just the average market movement we typically look at in seasonality, but actually looking at only the movement that is representative of the current price action. And by doing that, using TruePath to identify those years, we get a large number of years. Interestingly, a lot of them are pre-election years. A lot of the years that we are following at the moment are pre-election years, and this year is a pre-election year, which is why the pre-election pattern, you can see at the top, we also have a very strong positive correlation. But there's a couple of other years in there as well, so that custom pattern is showing that 77% positive correlation, and it still shows that positive bias towards year end. Some downside in through there, but the main point at the moment, again, it also suggests we don't do an awful lot through May. So again, just reduce the number of trades, trade a little bit more defensively, smaller time frames, smaller targets, and just have an awareness that we don't have optimum conditions here, and you got to trade differently because of that. Somewhere where we do have more optimum conditions, and I mentioned earlier at the start, we've got the DX, we've got the dollar index in here. It has multiple patterns. You can see here we've got two patterns, the blue and the purple, and that is the all years pattern, and we've got the pre-election pattern. So multiple patterns here that we have followed by default, and you can see we are just entering May now, and there is a positive bias for the dollar index to rally and move to that the upside through this period. The strongest positive correlation at the moment in terms of patterns that it's following is actually with the 20-year, and instantly when you put on the 20-year along with the current price action, you'll see we are very, very closely in line, particularly the timing of those tops and bottoms, which is one of the main focuses when using seasonal patterns. The timing of those tops and bottoms, and of course the direction in between. And we are now at an area where we're expecting to see that market to move to the upside, and it's very much high on my list. I like the chart. It's just a case of looking for that momentum to the upside, looking for that break. The pattern suggests a low here around the 3rd of May. We've actually got a low at the moment, actually in the 4th of May, but we need to see this break to the upside. I'm looking for price to break out above resistance through here, getting above that monthly pivot that we can see in this area. So pretty much getting above 101.50, today's high would be a nice area to look for that, getting above today's high and looking for continuations for that. We could be looking for that seasonal move and pushing up towards around the 103.50 area. On the flip side of that, there are a number of markets I like. Obviously, looking at euro on the flip side of a dollar index move is going to make sense. And again, if you look at current movement of the euro and the timing of the tops and bottoms, we are very much in line with how you'd expect the euro to be moving. If we continue to do that, again, you would expect to see the euro to move to the downsides. That's another market that I like and is on the list. And another one as well, looking at the British pound. The platform doesn't identify, based on the last 20 years, an optimum pattern in here. We've actually just come out of one, that positive move to the upside, but you can see the correlations aren't particularly high in here, so we can possibly do a little bit more digging to see if we can get a more optimum condition for what we should be trading in. And to do that, we can use another feature that we have here in the platform, and that is what if. And what I'm going to do here is just show, typically we have a lot more bearish momentum to the downside through the month of March, and we actually see we had not very little weakness in March, and actually at the main part of the current rally we actually seen that. So we're actually moving a little bit faster, a little bit earlier, a couple of weeks earlier than what we typically associate with the typical seasonal pattern. So I want to actually look at years where pound has kind of seen a strong performance through the month, and we can do that, and that's what if is for. So what if March is actually positive as opposed to historically when it is negative? And interestingly, we get a pattern like this, which also suggests the same as what the historical patterns do, which is where we get a high pretty much around the 1st, 2nd and 3rd of May and see that negative bias and see that market move to the downside. So I like that. We'll just turn off the 20 years to get a bit more clarity. We can see get a lot more stronger positive correlation with regards to current price action to the pattern that it's found, quite a number of years in there as well, and the bias is to the downside. So I'm looking for the dollar to break to the upside. I like the euro moving lower. We can see we're attempting to break support here just at 109.60. If I see a move below that level, I'll be looking to get short. Same with pound. I'm looking at this as a potential field breakout to the upside of this channel. As we come back into this channel, I will be looking to the downside and try to take it a little bit further. But the main thing is, I say, looking for the dollar index, for the dollar to find that strength to kick in its seasonal period, and I'll be looking to capitalize in across the board. I'll also be looking at Aussie, Kiwi and possibly Swissy, but pound and euro right up at the top of that list. So that's just a few ways to use the platform. Say currencies are right there. We're ideal timing for a number of those currency moves, but also trading is not just about finding the best trades, it's also having awareness of when not to trade or when to reduce the number of trades, and we can use seasonal patterns for that as well. And the fact that here the seasonal planner is not showing anything for the month of May for any of the major indices, the stock indices, that suggests I need to be a bit more defensive, so use it in that way. But by all means, if you want to dig into any other asset class, there's lots of patterns there over the next couple of few months. Start digging into those and you will find some absolutely fantastic patterns. Hope you enjoyed that. Hope you find that useful. As I say, if you haven't been on the platform already, I've just skimmed over a few of the points very, very quickly. Jump on yourself, test it out, see the patterns that have been following through already this year. There's been some amazing patterns, some incredible runs in currencies and stocks, some of the metals as well. So by all means, jump on. And I'll be doing another video very shortly on US stocks and also UK stocks as well.